Hey, this is Macro Atlas, and today we're going to be discussing the theory of recency bias for Bitcoin. So we have discussed the previous theory in a previous video about the great consolidation period, which says that the consolidation period may extend even longer, right? But today, it's important to look at a different point of view and see how a different theory may play out that has some validity, right? So speculation is all about probabilities. So of course, the great consolidation period has some probabilistic outcome based on it, but I place a higher outcome currently on the recency bias for Bitcoin. So to start off, recency bias theory builds on the bull market support band. So on a previous occasion, just in the previous little consolidation period that we had here, we saw that we got rejected off the bull market support band, and then we had a trend continuation to the downside. Well, that's visible for many people, but what people do not compare it enough to is, I believe, the previous bull market cycle, and specifically the consolidation period we had at the bear market phase of that cycle. Okay? There are a lot of similarities. Why it's a valid comparison is because there are a lot of similarities between how this cycle has topped out and how the previous cycle has topped out. Just to indicate a few is here the double top and the higher high that was formed. That's one. Second is that consolidation period that was in between the double top, and of course the little consolidation period that was in between of those two periods, right? Another one is that phase right here that we had here, which got also rejected off the bull market support band, and etc. Okay, and you can also find some similarities here and in that phase as well. Okay, the leg, the consolidation period, here it was brief, but here it was more extended. Here it was more extended. This way here it was more brief. Okay, so there's a lot of similarities between them. So I find it pretty compelling to argue that we are currently, and let's draw a box on it so it is more structured, in that phase. Okay, I would argue there's a possibility that we are having a little bit of that phase in that phase. Okay, not only in terms of timing and how the whole cycle is built, from the double top to the drawdown, but also structurally within that zone. So if you notice in the previous bear market cycle, we had, let's use a little bit of a smaller arrow here, one relief rally here, another relief rally here, even though it was a lower low. All right, that's an important distinction. There are differences between the two phases, and then we had made a higher high, a third relief rally that was stronger in magnitude and duration, where we went above the bull market support band, right, and stayed there for a little bit and then crashed. Okay, let's compare it to this time. We had formed a relief rally. It was made a high there, a new high. We made a higher high of when a second relief rally. In the previous one, it was a lower high, right? That's one discrepancy. But on the final one, where we reached the bull market support band, we made another relief rally with a stronger magnitude and and longer duration. Now, we have not extended beyond the bull market support band just yet, but that's a possibility. That's why I think it is a possibility to go higher from here. Okay, so microstructure-wise, there are large similarities between the two phases, not only in terms of the whole picture, but also in terms of the phase itself, the small phase itself. So I believe that it is worth taking into consideration that we might be right here. It is possible, okay? And that's how the theory is built up. So what we notice here is we go above the bull market support band. Right now, we're seeing some renounced strength, and we might be breaking the bull market above the bull market support band. And now if we break below it, then there should be higher conviction placed on that theory. There are signs that we are slowing down, but still going a little bit higher. You can see there's a little bit of a slower magnitude going on and weakness in price, okay? And let's also consider that oil started going up, and that will definitely put pressure on Bitcoin. So the timing-wise does fit with some degree, because oil has been going on higher for 4 days now, right? Well, 1, 2, 3, that's the number 4. This is daily chart, but this is, here is the 3-day chart. That's the difference in here. So that's in terms of bull market support band. But we can also learn something from the great consolidation period, because you can merge multiple theories. Well, now we're gonna turn off those for now into one. And of course, the price action is a composition of multiple factors. And I think the great consolidation period theory has some variables that maybe be mixed with the new theory, right? Specifically, how high can we go? So in previous, now here, of course, why is this longer is because we take the average of all the consolidation periods at that phase previously, right? And that's why it's elongated, because the Bitcoin cycle 1 and 2 had a much extended consolidation period than the third cycle, which is the previous cycle, the most recent one. But if we just compare it to here, but we take just how high can we go, we can see that, you see that relief zone right here, just before the consolidation period? Well, we usually touch on it and maybe extend beyond it a little bit, okay? And that happens cycle over cycle. We're gonna also test on the previous cycle. You can see that we test that zone. See, that's relief rally before the great consolidation period. We touch on the previous support that we broke into resistance, okay? So the previous support for the minor relief rally just before the great consolidation period. This is the great consolidation period. This is the minor relief rally. And that's the support that has been breaking down into resistance, okay? We see that playing out cycle over cycle, cycle over cycle. And so it does make sense to learn from such events, okay? So that here, great consolidation, we deviated a little bit above here, but we stayed contained and we kept retesting that support into resistance in the great consolidation period. So if we take that into the new cycle, right, and we take that into our chart of that theory, where we may be rejected from the bull market support band, maybe just break above it a little bit and go down, then we can see where we're heading right now. If we put a line, the support that we flipped into resistance is right here, okay? And that sits, we can say maybe around that range, and that sits at a price of 84 to 85,000. Well, one caveat to that theory is that we will have to extend way beyond the bull market support band to reach that level, okay? So it does make sense to maybe just go in between the both theories and say that we may have some room to grow, right? And for the price to go higher, but it's not a sure thing, as there are multiple factors that contradict, but there are multiple factors from previous cycles that say price could do such action. So it's not a sure thing, but it's something that Bitcoin can do. So if we go up to that level, know that we might get rejected from there. Because previously, in previous bear market cycles, we had gone up to that level, but we had also been rejected from the bull market support band. So it would make sense to just take the average, right? Or form a range that here is the zone of rejection. Before we say, oh, the bull market is confirmed and we're back on track, right? If we break above that level and we sustain weekly closes above that level, which is exactly 85,000 to 86,000 per Bitcoin, then I might my conviction might flip more bullish. But I know personally that a possible rejection in that zone is very possible and highly likely. And it's full of noise and not very informative. So here signs are to look for some kind of weakness and rejection within that zone that confirms the breakdown. But if we go above that zone and we sustain a week, multiple weekly closes, then the bulls may have higher conviction in their theory if we break and sustain above that level. Also, one more thing I would like to mention is the fact that that period had lasted from bottom to top around 66 days, okay? And here, from bottom to top, it has extended, I believe, beyond that period of 78 days. So the clock is ticking. If that theory has conviction, then a rejection should be soon, and we should see it within that range. But if we don't see it soon and it doesn't happen within that range and we explode beyond that range, then the bulls may have strength on their side. But if we get a rejection within that time frame and range, with strength to the downside, with more volume, with the increased volatility, and a good rebound to the downside, then the bears have the upper hand here. I hope you enjoyed this video and a little bit of an update and the renowned new theory. If you liked it, please drop a like and subscribe so you don't miss more. Thank you.